Welcome traders, investors, financial enthusiasts to our weekly analysis on forex trading. If you have ever wished for any crystal ball to predict where the markets are headed next, well, what if I told you that in today's video, I'm going to show you a very powerful tool that will give you a glimpse of the future. Okay? So, before I unveil what this week is all about, if you are watching our channel for the first time, right away hit that subscribe button, set on your alert to receive every time we post. You receive our video on your YouTube, and also hit the like button. Yeah, what is this tool that I'm going to unveil to you like never before? If you use if you use TradingView, either the paid version, the free version, there is a tool called the Pitchfork. It's a game-changing tool in the world of technical analysis. It is a game-changing tool. So in this video, what we are going to do is to unravel the secret behind this mystical tool and show you exactly how it can revolutionize your trading strategy. Okay, just get ready to dive into the world of trend lines, support and resistance, all in one combo. Okay, because what this is going to do for you is to show you, you've heard of trend lines, you've heard of support and resistance lines, but in this tool itself by Andrew, is called the Pitchfork, is going to combine this and show you exactly how to use them. By the end of this video, you'll be equipped with the knowledge and skills to harness the full potential of this tool and take your trading to a new height. So buckle up and prepare to witness the magic unfold as we unveil this secret that as it's never been done before anywhere on YouTube. Let's embark on this exciting journey together and uncover the key to financial success. We'll come back straight into this after the intro. Thank you. Welcome back. Before we proceed, please read our disclaimer. This is not a financial advice for you to enter the market. You need to do just the way I do to backtest anything that you have learned here so that you can apply it with your proper risk management. Take it into your trading tool. As one of our viewer actually requested, he was requesting for a tool that could guide you on trend line. This is what has pushed me into this research to bring out this tool for you. I hope you will come back to view this, and please comment after testing this on your demo account, and then give us testimonies of how this changed your trading journey. Having said this, there are some set of rules before I go into the show you how to do this. You need to apply this at shrink points. You have to combine this with other confluences. You can use the moving average. You can use the chart pattern, candlestick, what have you, even the MACD. Check for other confluences in our previous videos and make use of any of them. And most importantly, apply your risk management. Apply your risk management. This cannot be overemphasized. When we talk about risk management, I will go back a little to they just passed. That was yesterday, Friday. We have the non-farm payroll. That's Friday, the 7th. Yeah, 7th of March. We had the non-farm payroll news, 7th or 8th. I can't pick the exact date. Let me confirm the date. So we had the non-farm payroll and most traders were complaining of losing some huge amount of money during the news hour, simply because they did not apply proper risk management. Okay, they did not apply proper risk management. In the law of risk, the higher your risk, the higher your return, and you cannot sell a goat to buy an aircraft, right? This is an adage. So what I'm trying to say in essence is the importance of risk management cannot be overemphasized. Yes, of course, we have seen people that are on the lucky side. They can invest $100 and at the end of the day come out with $1,000 in one single day. This is possible. It depends on how well you understand the tools you were using, and then what is the market dynamics of that time. So, having explained this, we go straight into the chart tool to bring out what is Andrew Pitchfork and how you can take advantage of it. First of all, rule number one is that you can apply it anywhere. You only need to know the points, the string points that you will actually place the tool. What I will do first is to show you is here. You can get it on Threadlines. Scroll through, is called the Pitchfork. Let me put it on my favorite. So I want to show you how to draw it first. There are 3 points. There are 3 points, A, B, and C. The first point being the highest point. The second point will be the low. Then the third point would be, and this is how it's going to look like. This is not the default. This is the preset one I plan to use for this. Then you use the handle as the adjustment, which is your A. Your point A is where you use as your adjustment. Let me go to the settings and show you exactly what it looks like. Style. You could see here it said modified chief. Let me show you the original Pitchfork. Okay. I think the original, these are the new coordinates. The original Pitchfork looks like this. This is how the original Pitchfork tool looks like. Okay, if you are picking it for the first time, it's going to give you these key levels. Okay, and then as I said, the point A is usually the handles. So now, how do you place this on the chart, and what is the advantage? I will place the default. Let's delete it first. Now, first thing we need to do is to look for the point where we need to put this. Remember, in one of our videos, most of our videos, we made mention of this, that your top-down analysis is number one thing you do. Either in the day, now the week has closed on, let me go to our favorite XAU USD. This is gold. I would let me pick any of these brokers. I use O&O most time. Let me look at FX Open. Oh, I have some tools here. Let me look for another one that is plain. I can use Blackpool. Yes, this is plain. I deliberately want to use a plain one so that we will understand together what we want to do. Now, first thing we need to do here is to do top-down analysis. Top-down analysis, usually, as high as I could, I go, first of all, look at 3-month range, which is quarterly. If I look at gold, sorry, 1 second. Yes, it's in the auto lock zone. So if I look at this here, this is network. Why is it? Okay, let me go back. Anyways, looking at it, here we could see it's actually in an upward trend, right? It's in upward trend. Then I will go down to monthly. Monthly again is still in an upward trend, right? Then I go to weekly. So this is usually my starting point. In the weekly chart, we also see that it is moving from area of low to high. Okay, now the next thing I will do here, because this is a perfect place to put my to set up the pitchfork, right? Where is the most recent swing high and low on this chart? I will see that this is a swing high, this is a swing low. Now, in between this, there is another point. If you check here, this is more like a midpoint, which is another key zone. If I fit in, follow closely. I'm starting from the weekly time frame. Note that this you can put in, you can fit this into other time frames. Okay, you can fit this into other time frame other than the weekly time frame. But what I need to do is I'll place it here, then I would go back and I will go back to lower time frame to continue to fit the line. I just need guidance because the request is to give that trend line more like sure to the bank. What is this? That the tool that you can actually use with minimal loss. It's an optimal tool for you. Okay, it's a tool that will give you 99% accuracy if you follow the rules. 99% accuracy confirmed if you follow the rules. What are the rules? The first rule is what I'm trying to show you. Use the swing point. Use the swing point. Okay, now to determine the swing points here, first of all, let's mark our key levels. What are key levels? Key levels are where you have price reactions in the past, okay, that possibly something could happen around that zone again. If I pick this tool here, we had a high here, right? I mark this. I pick this again, we had a low here before it reversed. I mark this. Then we have another one here, which is another low after this, right? It went back high, we touches this zone, came back here, break this zone, and we have here. Okay, then mark further zones here. After this reversal, what happened? It came here. But looking through this, is it an area of importance? Not very. What about this zone? Do we have multiple touch within this zone? Yes. If I mark this, there is price reaction. You see, it forms a resistance here. It breaks through here, resistance and support, and so on. So first of all, I see another one again. First of all, you mark these key zones. This I could, okay, this one I can bring it as far back as here. Yeah. So you see there are multiple reactions within this zone. Okay. So now, having seen this, the next thing to do is to remember this is still on the higher time frame. Let me set this to, yeah, this is on the weekly time frame. Already I have the time, I have seen here that there is an uptrend here. How do I mark the trend? As left to right, you see is moving upward. So this is an uptrend. We are expecting until this is broken down before you have a change of character. So you have higher high, higher low, higher high, higher low, another higher high forming, which I think we had we had a new record yesterday of 2195. You see, this is where it currently is, 2195. So yes, now coming back to our tool on the weekly time frame, I'm going to fit the pitchfork right away. What I will do is, and these are I will use the recent high and recent low, the most recent high and the most recent low. Remember, I picked this because it has the biggest among them, right? I could use this as well. I could use this. It depends on the channel I want to do the analysis. Now, I went as far back as when this is March 2022. let's fit it and see. I will use this as point. This is my point A will be within this region, which is more like halfway between. Okay, I could use this because I have more reaction here. Comparing this and this is part of the analysis you need to do. I think I have more rejection here. I would like to use this zone. I would like to use this zone. Yes, support and resistance. Yes. So I would like to use this zone. Let me use this line. Fit it in here. Okay. Then what's the next thing to do? Now I go to pick my Pitchfork. Okay, I have it in my favorite tools. I pick it here. So let me use this as my point A. I said pick this and then pick this. Now, what happened here? Since I've pitched what I want to do, I could use this. I could also use this, which now sits in perfectly. You see, diagonally, there is a lot of reaction here. It broke through it. You see, there are touches here. Again, form resistance here and so on. So now I will delete the other confluences I put before to do this analysis. I can take out, go out. I can also decide to take out this. Now I have this. If you remember, well, immediately I started this video, what I had was different from this. I modified this to have, to give you this, right? It was modified. This is the low here before the, so it was modified back to the original. This is what you will see when you open up the Pitchfork tool. Now, I want to go inside this again and return back to my modified tool. What I simply did was I put an extension here. I check all this back to the 0.25. Okay, then I said, okay, you have more lines now. So adjust this to fit into, this becomes just a handle to control your lines. Now, what I will do here is, remember, this is coming from here before. Let's see if it has fit into that. I just want, okay, it is aligned. I just need it to align with this now. I'm using this as a fitting line. Now I am there, so I'll take it out again. It's just for me to get some precisions. Okay, so now this is it on the weekly time frame. What I want to do is to create that visibility, that so that even on the lower time frame I can see these key areas. So I will go to visibility and set it on all intervals. Then I will lock it so that there is no shifting. Okay, good. What is this telling us? I think one other thing to do, let me allow the background colors. I took that out before. Make it faint a little. Okay, so that it doesn't cover. Yes, I allow the background colors. Then let me look at other things to do on this. I'm changing this to 1 so that it's not too bold. At least you can still see your candlesticks and charts. Remember, before I proceed further to continue the analysis here, I ask you to make sure you are combining this with other confluences. Okay, you are combining this with other confluences. Now, what are those other confluences? I talked about the moving average. I can put here, I can put the moving average here, okay? I use the raw candlesticks to do this marking. Let me bring out some other interesting tools that we can use. We can combine with this. As I said, you could use the MACD indicator. Where is it? Moving average, convergence, and divergence. This is one. And what does this simply tell us? When you have the MACD crossovers, you expect some changes in the market, then you react that way. Okay. On this one, the blue line is actually the MACD line. The signal line, sorry, let me go to setting. Let's look at where are you? Give me the MACD settings. Okay. Data window. Okay. I couldn't see that. What the MACD line is the blue line. The signal line is this one. That's the brown line. Then you have the histogram that shows you the volume of trade in any particular time frame. Okay, we will use this in conjunction with this for analysis. So before I go into this, how to use this to your advantage, okay, it's coming. The fast length is 12.26. Yes, we leave it as it is on exponential moving average. Yes. Signal smoothing line, yeah. Then the style. The MACD line is the blue line. The signal line is this. Yes. Okay. So the visibility, leave it on all time frame. Okay. Now to proceed. When the MACD crosses over, we usually use that as an entry point that, hey, okay, the MACD just crossed over. We look at what is the volume like. Do we have volume? What is the behavior of the graph, right? The other confluence I would like to mention here is the use of the engulfing candlestick pattern. Remember in my intro, I talked about the candlestick pattern, chart pattern. So these are key things that you look at as a trader. This is the first thing you look at the chart. What is this data telling me? What information is the graph trying to play out? Okay, this is first thing you look at. Then you begin to look at your confluences. Don't rush into the market. If you rush into the market, you will rush out. In our last week video, I think 3rd of March, we mentioned the reliability concept of a trader, applying the reliability centered maintenance strategy into forex trading, where we describe three different type of traders. We have the reactive traders that look at the price action and jump into it. Hey, this is a red candlestick, then it's a sell, and they jump into the market to sell. This is a green candlestick, it's a buy, they jump into the market to buy. While some of them will win, most of them actually go back home crying. Why? Because what you see, the price action you see, is not a thing that you trade reactively. This is why we do invest a lot of time in teaching you different tools that you could apply. And after this, if you apply the tool correctly, we usually see the outcome as a profitable outcome. So, having said that, please don't use any of this as a standalone. Make sure you use your confluences. Practice make perfect, they say, right? When I look at a chart, a lot of confluences come to my head immediately. Even before placing any tool on the market, I will show you one typical example. Where is my let me show you one typical example. If I look at this from here, as we're talking, this just came to my mind. If I look at this from here, it showed it one of the tools we have talked about in the past. It's what played out here. Then this is the end of it. So what is that tool? Let me change this color first. Let me change it to white and reduce this. Possibly change it to, yeah. Okay, it's not visible. It's not visible with this. Let me leave it on lines. What this has, immediately I looked at this, I saw the double top here, which is M pattern. Down here, we have the W pattern, right? So this is a reversal pattern. I talked about chart pattern, right? This is a reversal pattern. If you go back into our library, you will see a video on chart patterns. This is M here, which is a reversal pattern. There is a retest of this region. Hence, my wave theory comes into mind that, okay, if you had an M pattern and there is a retest of the neckline, what do you apply? You take the length of this, meaning your wave theory sets in. You are possibly going to have the 5 wave counts. Take this into consideration, then that is the length from this point to this point, and then mark out your possible zone. If I measure this to this as my, okay, now let me now put, having said that, I will put the, where is it? It's supposed to be here. It's not. I will put the Elliott wave. So this is 0.0, as I said, 0.0, 0.1, 0.2. This is not up to 3, because if you take the length of 0 to 1, multiply by 1.618, you will not get the full length of 3. So this is not my 3. Then I would go down. This is my 3. My 3 will be somewhere here. 4 should not reverse past the 1. So this is 4, and then this is 5. 5 is either equal to this or more than that. So this is 5. Immediately we started talking, I just looked at this. Hey, this is chart. This is how you analyze your markets before you jump into trading. I have seen that an Elliott wave completed here. Is it also possible that I see another Elliott wave formation from here going forward? Yeah, who says it cannot be possible? Now, after the first 5 count, you have the A, B, C. C usually the longest. I would say that this is possibly C. Okay. Now, if I also say that after this, after the W I have here, I can mark this as 0.1, but I will check if the conditions will satisfy the Elliott wave conditions. Otherwise, this could be my 0.1. And if this is my 0.1, which means the whole of this could also form the W for me, or taking it from here, I have the W, then I have a retest here of the neckline. So which will be, this will be 0, this will be 1, this will be 2. Then if this is 2, have I seen my 3? Again, remember there is a retest of this zone here, which means it's still the same, because it's on the same line. So if that is the case, this is still 2, meaning my 3 will start counting from here, which is usually the multiplication of this length multiplied by 1.618. This is not for this, but take note of this. Go back to our video on Elliott wave, check the rules of Elliott wave, apply Elliott wave as part of, let it be in your toolbox, such that when you look at a chart, the chart speaks to you. What is it you can get from the chart? What pattern is it revealing to you? Chart pattern is very, very key. And also candlestick itself, the candlestick pattern. What does the candlestick say? Here you have a doji here. You have this one is an indecision, this is also an indecision. Then all of a sudden so when you see this sensitive pattern, look at another one here. You had a doji here. What happened next? Okay, here I had an engulfing. This is engulfing candle. This candle is engulfed by this candle. All of a sudden it came back here. While you have this hammer-like candlestick, another engulfing happened here. So it's a strong indication that there is a trend continuation. Okay, when you have a breakout, it came back to retest that zone, and another engulfing candlestick happens there. Then you are set to move for a new ride. So all this combined, this is how it's be. And again, look at what happened after this formation. You have this come back to retest this zone. This might not be clear enough for you. All you just need to do is to switch to line. You switch to line, you see fit in another line, at that zone, and see what happened. We have this market. Let me reduce this. I use this. Okay, let's leave it at 2 and break the lines. Okay, good. Pick another one. Look at this zone here, fit it in here. Then pick another one, fit it in here, and so on. Okay, so on this zone, remember our peak. Can I hide this? No, I'll leave it as it is. On this, now I return it back to my my candlesticks. You would see that, okay, after a break of this, we have, this is change of trend, right? Change of character, we call it, change of structure. From the downtrend got switched here when these candles actually closed above this neckline. Then it came back here immediately to retest that neckline and it breaks up. So this downtrend has changed automatically. This is one way. Then this one, I can take this out. Take this out. Another simple way to actually check if there is a trend line change, if there is a change in direction, is to just fit a common straight line. Look at all the lower highs, join them together with a line. Immediately that line is broken, then you know that there is, look at where it's broken here. You have lower low, lower high to this point, lower low, lower high to this point, lower low, lower high here. Then lower low, instead of lower high, it breaks it. So this is, and then usually you have confirmations coming back into retesting the zone. One of the zones, the last lower high here in this case was retested here, not this, not the neckline for the low side. So I'll take this out. I'm just giving you several instances how to marry these tools together. You wait patiently towards the end of this. I will give you the summary of how to, I will type it out for you, how to actually use this tool correctly. But again, I'm trying to show you that join them with confluences for your right market entries. And while I'm doing it on the weekly time frame, you can do it on any of the time frames. Go and look at our Elliott wave theory. If you have some questions, you come back, drop a note on the comment line. We will get back to you. So I'm taking this out to make my chart look clean. Now we are back to the Andrew Pitchfork. Now I will go to my daily time frame. Remember, I enabled this to be shown on every time frame. Now let's see what happened here, how to apply the Pitchfork. You see that from this line, I might just mark this naturally on the daily time, on the weekly time frame. Look at what happened here. You have that doji candle here, which means it signals something is going to happen. Truly it happened. It came down to the next line, another doji formed here, it came back up, inverted hammer touching this line again, which means, and if you, the interpretation of this candlestick is that there are selling pressure, heavy selling pressure. When you say inverted hammer in an uptrend, this is a small uptrend, it's a strong indication that there is a selling pressure. So with this selling pressure, it did not only come towards the next pitchfork level, it breaks through 1, 2, 3 until it gets here. What happens? Strangely, on getting here, you begin to have series of candlestick formation. You have first this indecision candle, you have a partially inverted hammer here, you have another indecision, boom, then the buyers came playing. So what they have done is that not only did they push the market up, they create a fair value gap here that is still open to be closed. Okay, they create a fair value gap here, and then it keep pushing up. The same way it push hard down, the same way it push up back. One thing we used to look at is that every time there is a strong momentum towards a direction, the pull out, the resistance coming from that direction is always also very strong, which is what shows this long ride and then also a push above this zone now up here. It got to this zone, there was a lot of consolidation within this zone. A lot of consolidation. It came back a little, then this forms an automatic support for it, push it back up. Okay, then usually where you have this I call it outliers. They are unusual candlestick. Remember, this is technical analysis. These are unusual candlestick movement, which is usually characterized by news, the fundamental news is like this. For example, here we have the unemployment rate 8th of March. Okay, yesterday was 8th of March, the non-farm payroll. Then other ones coming up, we have inflation rate month on month, year on year, and so on. We should also have the you have PPI here. You have this is just consumer sentiments and so on. So each of these, there is an expected reaction, but that does not take your technical analysis will position you well, okay, for any again I go back to maintenance. If you have not watched our last week video, the video on the 3rd of March 2024, go back and watch that video, because a lot was revealed in there, right? And if you keep watch it over, don't watch it just once. If you don't understand, you could watch it once and you get the logic, what it entails. If you don't understand it, keep watching and watching until you get the concept there. One analysis and one reference I'll draw from that video is when you have a vehicle and you maintain this vehicle according to the OEM recommendation, right? You are 98% sure that that vehicle will not break down, okay? And what is the, apart from that, you also do periodic inspection to actually keep the maintenance going. Then you'll be sure that, hey, nothing is going to go wrong. The same thing here, when you do your technical, if you know your technical analysis inside out, the way I'm showing you, and you apply them correctly, your fundamental news would only have little impact. In fact, you can decide to stay out of trading during any news, any high impact news event. Stay out of trading. Immediately after the trading, go back to your to what you have. This pitchfork I draw here, what I'm only going to do later on is to take out the background colors. I will leave this on my chart for a very long time, because as you see, we drill it together. I see it's a perfect fit, and I would leave this so that where it can also guide us when we do live analysis on possible direction of markets. Okay, so having said this, a lot of consolidation within this region, and then all of the sudden there are indication here. Okay, you saw this form within this region, and then a lot of signal, a lot of candlestick pattern here signaling something is about to happen, either up or down, and boom, it begin to go up. Okay, now we cannot tell whether this level is the level it will retrace from. But one key thing from our own tool, what we do is that even if it's going to retrace from this level downward, there are other confluences that should tell us this. Okay, from this confluence here, from the MACD, I could see nothing to talk about here in the MACD. If I see this is a new this is a new high, 2195. This is a new high set yesterday. The only thing we could read here is that we had an engulfing candle here previously. We had an engulfing candle here. If I put a box around this whole zone, a box around the whole zone. I was expecting that from here, that is from this candle of the 5th of March, if I had seen another engulfing candle within this region, then I would say the market is ready for reversal. But with this, it has broken this zone. Then we have to look for other confluences that would combine to tell that this market is ready for reversal. Remember, I'm on the daily time frame. If I go to the lower time frame to analyze this region, there could be some indication of maybe a little reversal, but for the higher time frame and what to come, I don't see a reversal near any time soon. Again, in the last week video, I keep making reference to that. In the last week video, when I looked at the 3 months analysis, I said that from the all indication, that is the quarter on quarter analysis of the chart, that from all indication, we are not done yet with the upper trend. That what I see and what I use there is the engulfing stick rule pattern. Please go back to the video and watch it. I said that as part of my trading strategy, I will still be looking at uptrend up till the mid of this year based on that analysis. And now we have seen the journey has just begun. Now, let me, before I round up and give you the summary of this tool again, I want to see in the lower time, I want to step down to see how this is behaving. So if you see here in the 4-hour zone, we have this within this region, right? We have this within this region. We have what we need to watch out for here. We've started seeing some candlestick pattern that could actually trigger something. Here we see an inverted hammer. The price pushed up here, but sellers jumped in and begin to draw it down a little. This is one. For me to have a sell here, I would need an engulfing candle. You see, my MACD is parallel. There is nothing significant to pick here. You could see the histogram formation as well. Maybe by Tuesday, I would come back into this to look at what has played out between Monday, Tuesday, and the next news being on the 12th, to see also whether there are some key things to look at before the news actually happen. Okay, this is one of them. So what do I see here? Even if I go to lower time frame, usually I stop. Now this is what we are saying. Within this region, I have an engulfing candle. I have an engulfing candle down here. So what I would expect in the 1 hour time frame is that for me to trust for a sell, that a sell is possibly happening here, I would expect another, let's place that. I would expect within this region, I would expect another engulfing candle. This is a clear engulfing here. It happened 9 p.m. on Friday. So I would also be expecting another, it might, again, for my rule to work on the engulfing candle stick pattern, this has to break out of this zone first, which it did here, but not complete. It will come out of this zone, retest, and immediately it retests, I'll begin to look for another engulfing sell. So once I get that, first target from this rule is to actually target this this region, 2144, 2145. Okay, and then gradually until it breaks each zone, and the next major zone is actually this 2136. I fit this from the daily time frame, right? I will take it out because I don't need it. I'll take it out. I want my chart to be as clean as possible. So from here I have this. Now if I look at MACD here, the MACD line is trying to cross over the signal line. You also see that the histogram here is beginning to fade out. So these are some of the confluences we are looking at here. We are looking at MACD. What's MACD telling us? We are also looking at engulfing candle that we have spotted here. but as I said, we will have to wait for more confluence. We don't rush into the market. You rush into the market, you rush out of the market. Okay, so keeping the best for the last, let me now give you a summary. Let me use this tool, text tool. Okay, first of all, what did we say? You need to, number one, to use the Pitchfork tool, you need to select 3 points. Select 3 points on the chart. So these 3 points would be, select 3 points on the chart. Let me use this as the heading. Rule 1. Let me bring it here. Okay. Come back again. Come back here. Change this to white. Reduce the font to, no, 10 is too small. Use. So here you need to identify significant points on the price chart, A, B, and C. Okay, identify 3 significant points on the chart as A, B, and C. Okay, A, B, and C. Then what happened here is that your point A is usually the handle, right? Then you have a low point. Sorry, your point A will be a high point, point B a low point, or vice versa, and then point C would be something between A and B, a point between another significant point between A and B, such that you will use that as your midpoint, as I showed during the first one. So the second point would be, let me see if I can clone this. Clone. Okay. So take it here. Just edit it. Your point 2 would be to draw the trend line. Draw the trend lines. So you see by the default setting, let's say, okay, let me clone this again. Clone this, bring it down, just to make it fast for us. Edit it. Sorry. No, please. Okay. So on this what we need to do is that the default, change the default settings of the Pitchfork tool to include all the intermediary lines, or let me call it zones for better visibility. Sorry, for better visibility. So what will happen is, usually draw this on a very high time frame. Fit your tool on the high time frame, right? What I did was to fit it on the weekly time frame, then we move down to the lower time frame to actually check what played out on each of this zone. Okay, so I have given you 2 points. The first one is mark the points on the chart. Second one is to draw the trend lines. Then the third one is identify the support and resistance zone. So let me put it. I will be how many points do I think about yes, it's 4. It should be 4. Clone this again. Clone. Let me clone it one more time. Clone. Okay. Point 3 would be identify support and resistance. Identify support and resistance zone on the tool. I would explain it. This is your point 3. Yeah, point 3. Then 4. Let me edit it now. 4 will be, which is the key reason why you draw it, monitor the price actions around the lines. Monitor the price actions along the lines. Let me draw this. Okay. Sorry, it incomplete. As I said, this is not for you to begin to trade right away. I need you to just take little extra time, do some back testing on how this can how you can apply this tool correctly. And again, it depends on the confluences that there are other confluences that work for you. I have shown you some few ones that I use personally. You can also use them. You can use everything I have provided in this video. You can use it as your own trading, as other confluences to support this analysis. And as I said, you can decide to stay out of news, okay, which is very important. If you don't have the technical knowledge to trade news, stay out of news. Okay, so number 3, we said the upper and lower trend are your potential levels of resistance and support respectively. So use the upper and lower trend lines as your support and resistance levels on the chart. Study the price actions around them and take note of candlestick formations for key decisions. Okay, this is it. And the last one here, as I said, you need to monitor. Okay, I think I also mentioned this. I mentioned this in the 3rd rule, but here what is important is that combine the price action from here with other confluences to ensure a perfect entry. So this combined, if you use this combined, you are guaranteed that you will have a very successful trading. One other rules I usually tell traders, I think I have to put this here as well. This is going to be the closing remark. I would put it in which color? Yes, it's a warning. Let me put it in red. White background. Okay, or let's do it this. No, not this, sorry. I want a white background. I want a golden text. Or let's leave it as red, as I said. Dark red. And what is that? It's going to be big one. Let me write it here. You read yourself. Do not what this says, do not force the market. This is very, very key. Do not force the market. Do not do assumptions. Do not place an assumption. Okay, if this is this, it should be this. No. Make sure your rules are satisfied. As I said, when you look, if you go back to the weekly time, first of all, what is the first rule? I have to do a top down. Ignore this. In the lower time frame, you will see it clearly. I have to do a top-down analysis first to tell that this market is in an uptrend. Then I use the most recent swing high and swing low to fit my two cardinal points, B and C, and then the third one to look at another point here in between the two and see that are actually a key zone, right, to fit this. This is very important. I'm not assuming anything. I'm not forcing it. I don't just jump in here and say, okay, the line should be between this and this. No, I might be missing out a lot of information. Okay, it has its rules. It has its rules. Make sure you stick to this rule. Okay, this is one. Secondly, while I was analyzing here, if you remember, I quickly picked something that just appeared to me because I am when I look at charts, I look out for what information is it passing. Okay, I saw a change of structure here, and then what happened eventually? No, not here. Sorry. Cancel. Let me delete this. What happened immediately was when I saw this, I was able to tell that, hey, it seems an Elliott wave just happened here. I told you this usually might have been as a result of news. I stop here. I had an M formation here. Then a retest of the neckline here. Then I said this is my point 3, my point 4, my point 5, and then break of structure. Okay, so immediately I saw an Elliott wave here. Do the same. Don't rush into the market. Don't do the reactive trader. Go watch the last week video. There is a lot of information there to warn how you behave. Please and please do not trade reactively. Make sure that your trading rules are satisfied before you take a trade. Yes, finally, which I started with again, I'm ending with it, is your risk management. You need a proper risk management to make sure that you don't lose your hard-earned money. Risk management is where don't put a $10 into a trade and then you would expect that you will come out with $200, $500 just in a go. If you are lucky, yes, you can come with $1,000, but trust me, most of these actually go down the drain because traders that use this low amount of money, that risk this low amount of money, most of them don't even know what a leverage is. For example, you are trading gold, XAU USD. You have $100 in your account and you are risking 10% of this. You are risking $10. Immediately you enter the market, you have a leverage, let's say a leverage of 1 to 100, for example, or 1 to 500, because it will allow you to do some good lot size. Immediately you enter a market, the spread, if you have not observed this before, especially new traders that will be watching this video, If you've not observed before, immediately you click sell or you click buy at the market price, you see immediately that the value goes into negative. That negative it goes into is called the spread. So you need to take note of this, that what will be the impact of the spread in my trade. Let me put something here. Risk analysis is as equally important as the whole trading itself. I put this here. This is the it's a tool here. You can use it to, if you see a point you want to enter the market, you can use this to try it out. Okay, your risk to reward ratio here is 1:1, which means if it goes into in your favor, you win the amount you have risked, and if it go against you, you are losing that amount. Now with this, if I have seen on my trader, okay, this is what I want to do, and you set this, have you go back and use, there is what they call profit calculator. Calculate your entry point, look at the lot size you want to trade, what will it give you if it goes in your favor, and what will it give you, most importantly, what will it give you if it go against you. Okay, if your lot size is such that if it goes against you, it's going to knock you out of the market, it's going to take out your equity, and then even the margin, the free margin you have, is going to take it out. Do not take that trade. We have a video on risk management. Go into search our channel for that. And then if you also need anything special outside what we have talked about today, you can usually go back, drop a comment for us. We will read and then take appropriate time to attend to your request. So this is where we'll draw the curtain for today. As I said, please do not force the market. Thank you. Bye bye.